Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning on March 21st. So I'd say for the past week and a half for the indexes, and for most stocks, I'd say almost 2 weeks, we've seen some stabilization. It hasn't been a huge bounce, but we have stopped going down, okay? And during that time, even before the lows, we have seen some sort of secondary positives. Last week, we talked about the broad market, positive divergence with the new lows, and we have seen new lows drop pretty nicely here so far this week. Not so much like it's an all clear, the sellers are all gone, but certainly better than the alternative where there's still hundreds of stocks hitting new lows, even on days the market is rallying pretty nicely. We've seen treasury rates come down, which nobody talks about anymore. They're talking about tariffs or whatever, but eventually that will be a positive, okay? And then we also have sentiment, near-term sentiment. Again, it's secondary, but investors' intelligence, AAII, we're starting to see more and more pieces fall into place that say, hey, what people are kind of worried about. It doesn't mean they can't get more worried, but a lot of things, a lot of indicators are kind of at levels that correlate to a low. It might be a 3-week low. It could be the final low. It could be that sort of thing. My guess is, though, when you look at the primary evidence, it's all still negative. Intermediate term trend, our longer term trend model turned negative. You could say it's neutral. It's not a precise timing indicator, but either way, we're living below, and a lot of stocks are living below longer term moving averages, okay? So, ideally we're starting a bottoming process here where maybe we rally, then we come back, maybe we hit a new low and snap back, or, something like that takes a while as institutions sort of rotate out of this and buy that sort of thing. But we'll just see how it plays out. Right now, we're still very, very defensive. We're over 80% cash in Cabot Growth Investors model portfolio. I wouldn't mind putting a little bit of money to work if we see some upside follow through, say next week. We have been testing the last couple of days on the downside and seem to be holding as I record this. So I wouldn't mind, putting a little bit of money to work. We do have quite a bit of cash, but in terms of any major buying, of course, we're going to need to see the intermediate and, eventually longer term trends turn positive and some stocks really break out in the upside. And, at this point right now, I'm not saying it's going to take 6 months. I'm just saying for this point right now, I think a little patience is required here after the sharp downdraft and just trying to stabilize here, take a few weeks to see if we can't bottom out and some new leadership develops, okay? Let's hop into the charts. As usual, I'm using a program called Market Surge. You can learn more at marketsurge.com. It's a product of Investors Business Daily. And I got a lot of charts just to run through and a couple of small lessons too, but you can just kind of see what a lot of stocks kind of look like this. This is just the NASDAQ where it's had this huge drop. It was about 14% from high to low, and it's stabilized in here, but it hasn't really bounced yet. Now, that doesn't mean we can't come in next week and boom, boom, boom. The reason I mentioned sentiment, because this is really what counts as price volume and action of leading stocks, but maybe expectations for the tariffs, say, are this big and they end up being this big. They're still there, much bigger than they were, 3 months ago, but expectations are it's going to be this big. It ends up being half as big or whatever. And maybe that causes a rally, and if so, we can go from there. But at this point, on an intermediate term basis, the way our model works, the market, the major indexes, most of them basically have to be higher than they were 5 weeks ago. So it's kind of a moving target. But right now, 5 weeks ago is something like back here. So, like I said, a little bit of patience is required. Now, 2 or 3 weeks from now, we'll be dropping off stuff down here. I didn't actually count it out. So we'll just see how it goes day by day, week by week. But right now, there's no question, the intermediate term trend is down, okay? S&P 500, same thing, still living below all the moving averages. IJR, small caps, is buried. MDY. So we've stopped going down in here, and the broad market has looked a little bit better than the big cap indexes, which we've seen in the new lows. We see in some of these indexes like the mid caps. So I would just consider this a first step. We stopped going down. We've seen a few secondary positives. Now let's see if we can get a little bit of upside momentum going. My guess is the odds I would just say the odds favor. It's not my guess. Say we do rally from here. There is going to be a lot of resistance up here. There's still probably a lot of institutions that haven't, tariff news or not, there's probably institutions that haven't sold all they want to of XYZ and bought what they want of ABC or whatever. So that's what I mean when it takes a little time, okay? But nevertheless, if we do get a rally, that should allow us to, like I've said a few times, see which some of the future leadership will poke its head up, that sort of thing. Right now, we're seeing a little bit of that, but it's still early, and like I said, a lot of these things haven't gotten off their knees. Just running through some of these. This is the FFTY, which is kind of it's the IBD 50 ETF. It's not an exact match, but So it has, again, you are seeing some upside testing here. There's resistance up here and all this, but the trend is clearly down. But let's see how it goes from here. Can it stretch higher? IPO fund hasn't done much. The equal weight NASDAQ 100, these are just growth funds we tend to look at. Most of the stuff looks pretty similar, okay? We'll look at some things that don't look similar in a good way, okay, in a second. The last two things I just want to mention real quick from sort of the 10,000-foot view. I do find it interesting. So, we saw the XLP, consumer staples, defensive stocks, start to perk up in January, and then they really accelerated higher here. You can see this blue line is the relative performance of the S&P 500. It really skyrocketed as this fund went up or held firm while the S&P was falling apart. One or two stocks can influence some of these ETFs, but I do find it interesting how it hasn't really come off here and really hasn't bounced of late either. As I've said many times before, if we do bounce, not just stop going down, but actually bounce, one of the things I'll look at is just sort of reading the tea leaves is XLP up 1.5% on the day and the NASDAQ's up 1.4% on the day. Is the XLP leading the way higher, or is this thing actually kind of unwinding and the NASDAQ starts to gain strength and growth and some risk on names? It doesn't just have to be the NASDAQ. It could be some cyclical stocks that have a little growth component to it, that sort of thing. That's just something to keep an eye on, going forward. All right. Next up is, I mentioned Treasury rates. Again, it's funny. Nobody talks about it anymore, which is fine by me. But, some people are saying they're falling because there's recession fears, whatever. It is what it is. So rates topped in early January. This is the 10-year note yield. And clearly in an intermediate term downtrend. Now, maybe if the market rallies, maybe this spikes up and that kind of goes away or whatever. But just taking it for what it is right here, the trend is still down. And I mean, if this starts falling even further, eventually it is going to be bullish for the economy, for the stock market. I mean, eventually that's the case. Okay, so as a background indicator, I mean, this is positive. It's not like the market's falling like in 2022 and interest rates are just every week going up, 25 basis points. It's kind of the opposite happening here. All right. Now, a couple of things I just want to mention. This is just stuff that's run through my head this week. Like I said, we haven't really bounced yet. It's still probably a little bit early for relative strength. I don't want to say studies, but comparisons, just because it's a few days and, it's not like there's these huge dichotomies that can be seen, okay? But the S&P 500 hit its low on March 13th, okay? I already mentioned back here the number of new lows on the New York anyway peaked, and the S&P 500 actually peaked on March 4th. So there was a little bit of positive divergence there. But just as something, if you're running through some stocks that like, hey, this might be on my watch list or not, this isn't anything definitive, but you start looking at some of these sectors. So I mean, this is actually, let me get this back. So this is the XOP, which is oil and gas. The low here was March 5th. Okay, so instead of March 13th, it's March 5th. In fact, I would say most stocks that I'm following bottomed March 11th or even a little bit earlier, a couple days before. XBI, which is biotech. Again, no real bounce here. You can see it really hasn't bounced. It's just stopped going down. But the low here was March 4th, when the 2-second indicator, the number of new lows peaked, okay? So again, this is like 7 or 8 trading days ahead of the market, which can just be an early, again, it's very early and sort of nibbling around the edges. I like to do the videos where I can say, this stock broke out, it looks great, volume was up, but that's just not the environment we're in. We're trying to look for little hints of potential future leadership, okay? Another thing just to say would be, those are two sectors, in other words, that bottom before the market, so something to watch. Another thing I would just say, as I get the pen back out, is this is the XLF, which, to be fair, other banks don't look as good, but I will just say that, relative to the market, XLF is not that far behind a new RP peak, and this has been, nothing, it's not an all-time great bounce, but it's certainly been a better bounce than most of the big cap indexes. Given that it's big cap banks and stuff like that, I do find that, combined with the XLP kind of being soft, it is kind of a ray of light. I'll just put it that way, okay? So that's just one way of doing a little bit of relative strength, is to see some of the bounces, but also to go back and just see when your stock that you're looking at, did it bottom, 2, 5, 7, 10 days ahead of the market, sort of thing in this recent downdraft? If so, then, keep an eye on it. It could be showing an early sign of leadership, okay? In terms of some of the names that have been hit, I mentioned last week some of them have kind of started building these bottom areas. I just wanted to say we're starting to get to the time where you can kind of do the tennis versus eggs thing, tennis balls versus eggs. An egg is something that falls and it's splattered. Oops, it falls. There we go. It falls and it's just kind of splattered on the ground. Now this is TWLO, TWLO. Again, it's still early, so I mean, 1 or 2 good days here, you're saying, wow, it's bouncing well. But so far, the stock went from 150 to 100, and it's at 102. There's been no bounce at all. So I mean, it wouldn't 1 or 2 bad days, and this thing's easily hitting new lows. Cloudflare, which was another one, NET. Again, you can just see during this decline, complete meltdown from 177 to 115 or whatever, 113, and just no bounce. So if you start to see that, I mean, I'm not saying at this point you have to cross a bunch of stuff like, oh, this Cloudflare will never come back from this. It's possible this is just too early to judge it. But you're starting to get, every day that goes by, you get a little bit more evidence, okay? Conversely, you're just looking at Okay, now there's other names in cybersecurity I think that look better. We're going to mention a couple. But this is CrowdStrike, CRWD. Again, it's like the financials. It's not an all-time great bounce, but it did recoup about half of its decline during this bounce phase, which is better than, it's a hell of a lot better than, which one looks stronger? This is QQQ. And this is CrowdStrike. So you're just kind of trying to find some stocks that are bouncing and then holding up. Kind of shook out so far this morning. Seems to be holding pretty well. Spotify. Now, I will say Spotify's had a giant run. This is not my favorite scenario because eventually you feel like there will be a, 30% correction. But with that said, the market is kind of like giving everything a test here, obviously, with this correction. So Spotify certainly it held up, it got hit. And then I didn't do the math, but it looks like it's recouped maybe 60%, 65% of its decline, something like that, back to the 600 level. Maybe it does this and is never heard from again, but overall, that's certainly the type of tennis ball type action you like. And even something like NTNX, which this one was a leader in late 23, early 24, topped in May, I think it was. And it's basically just built this huge, whatever it is, 10-month base at this point. Tried to break out just when the market was topping out. That didn't work, of course. So it got hit, but now it's kind of bounced again, probably bounced about halfway back. So just as you go through if you want to go through charts this weekend, I do it for you. But if you want to do it, if you're a paid subscriber, I do it for you. But like if you want to do that, that's kind of relative strength you're going to be looking for here in the days ahead. In fact, I'm not rooting for the market to go down, but say the market does have another, not like we just saw, but say it goes down another 3% next week or tests the lows or whatever, it's going to make it even easier to kind of spot which stocks are more resilient and which aren't. Okay, so as the days and weeks go by, that's really pretty much one of my main focuses. Okay, in terms of resilient names, just to throw some at you. Okay, OKTA, OKTA continues to look good. Again, in the cybersecurity space, it's not only strong, but I like when they're strong and tight. Again, the market's going to tell us it's going to have a huge impact here. If it sells off, that sort of thing, it's not going to really matter. But it's not like it's strong and it's doing, it's relatively strong, but it's like it's all over the place. This one definitely seems like there's really not a lot of sellers in there. They've already been sold out over the past year or two. Okay, Rubric. This one is a little bit, we'll see how it goes, but I mean, I love the story. It got hit. It came back on earnings last week. And so far, again, the weekly chart takes it out. It's down this week, but pretty small in there. So we'll see how it goes. It wouldn't surprise me if it, has a little bit of give back here. But overall, those are two in the cybersecurity space that look good. Aerospace stocks, it's a little, I wouldn't say defensive, but it's like a little defensive growth. But GE, this is it's a new relative performance peak on Wednesday, I think it was, which is just notable. Not a total surprise. It's near its high. S&P isn't. And by the way, it's had a pretty good. Again, you kind of have this not nearly as dramatic a decline, obviously, as TWLO or whatever, but a pretty a nice correction here, and it's bounced again. I didn't do the math, but halfway back or 60% of the way back. So that's pretty good so far. Certainly better than the indexes. Standard Arrow, SARO. New issue, there's some old overhead. So we'll see what happens. These things can trade a little bit differently. But, volume is picking up in here in general. You can see it's becoming more liquid and obviously hit a recent new relative performance peak of a few months during the last few days. So holding in there pretty well. Medical and biotech in general. So this is Penumbra. Not the most dynamic bounce, but not bad. And just overall, it's, on the weekly chart, it's 11% off its high, which is pretty good for a growth stock. There is old overhead here, but this is getting a little bit, this is back in, mid 2023. So my thought is if this thing can kind of build out here, say it builds some base, breaks out in a month or 2 or 3, whatever, it's going to be pretty much free and clear. Okay, so Penumbra looks pretty good. Royalty Pharma, RPRX, just a huge turnaround play. You can just see it's just been dead as a doornail. And then this clearly a character change in the supply and demand over the last couple months, and it was up many weeks up in a row, pulled back into the 10-week line. Not the most dynamic name, but 34 to 32, it's bounced most of the way back. So we'll see how it handles itself. Not a lot of volume on the bounce, but I mean, it's definitely resilient. Okay, Crystal Biotech, KRYS. This one's still base building, but big numbers here. I mean, big estimates. We'll see, if the market cares. But it's got this, longer term uptrend, but then it had this tedious correction. Obviously, this is almost like a reset base. Reacted well to earnings a month ago or so, and it's been holding in here. Reacted well to earnings when the market was getting hit, and really just kind of has been cool, calm, and collected here ever since. So maybe it's changed character. The sellers are out. The buyers are starting to continuing to build positions. Okay. Chinese stocks, I think, look good. They're a little, I don't want to say they're obvious like everyone's talking about them, but short term, there's just a lot of hubbub about them. And in a bad market, if you're very strong, like a group, it usually eventually finds sellers. So a lot of them tried to, quote, break out of these little ranges here this week. They've pulled back. This is Alibaba, BABA. Who knows? Maybe it breaks down. But overall, this is kind of normal for me. I wouldn't be surprised if some of these, like, here's XPEV, which has been hotter. This is XPeng. It's a EV maker. You can see this huge rush higher. And these are all liquid stocks. And now it's really, it is deflating, but it's pulling back just to the 25-day line. So whether it's something more liquid, which is kind of what I prefer, or something like an XPEV, my guess is you'll probably get a little bit more of a pullback and a little bit of a rest, but I don't view this dip as some sort of like major failed breakout. I still think they look pretty good. And then natural gas stocks, I will say, I did mention this, so I don't want to give away too much, but there's a few in there that they've been out of favor since 2022. They did have maybe 2 or 3 month runs to either new highs or year highs or that sort of thing. And then in the last, since January, basically there's been 2 bottoms. Okay, it's kind of a double bottom shakeout base. And now they've kind of come storming back. Now prices are up. Commodity stocks are tricky, and they're never going to be like the core of my personal portfolio. But the group is acting pretty well. And, energy as a whole has a history of dancing to its own drum. I don't want to say counter trending, but if prices are doing well and demand is there and whatever, the group can do well kind of no matter what the market's doing, whether it's doing good or bad or just going sideways. So anyway, there's some natural gas stocks. This is Antero Resources is one of them, AR, but there's a few others that we've highlighted or whatever. So, we'll see how it goes. They're all kind of close, either just below or just above some key resistance areas there. So, just back to the market, ideally, the secondary positives that we talked about or secondary encouraging signs tell us that we can start a bottom building process. A bottom building process, first of all, I'm open to anything. So hopefully, boom, I'm all for it. Odds favor, though, a bottom building process can be messy. Maybe we come in next week and break to new lows, and then we snap back, and then we rally up, and then we come back down. That sort of thing where it's it's annoying, it's tedious. I tend not to play those because it's all volatility. But ideally, the sentiment, the broad market resilience, you can see things like this is the equal weight S&P 500 just looks, you can even see, here's the relative performance line, just trending higher just in the last few weeks. The broad market resilience, the sentiment, stuff like that. Hopefully that means we can start, or we're about to start, some sort of bottom building process. And then we're going to see more things where, some of the, like a Spotify that, has corrected, but didn't die and has bounced back. And, maybe the market retests its low, but Spotify only comes about halfway back. You can see more of this stuff just unfold day by day, week by week. And after this whole thing, there's going to be a sustained advance. I'm not saying it's going to be like shooting fish in a barrel like last year, but there's going to be leadership. There's going to be probably some fresh names that I don't even know about right now, and few people do. that are going to launch sustained advances for 3 months, 6 months, whatever, and make some money. So the goal is just to get from here to there and just make sure you have as much capital and confidence intact as possible. Okay, that's all the time I have for today. As always, thanks for listening. Be sure to come by again next week for another Cabot Weekly Review.